Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. I am here with Rudy Fronk of Seabridge Gold. Rudy, thank you for coming on the show.
Steve, great to be here.
Yes. So we met on the boat cruise. We were introduced by Ronald, a listener of the show. I'm sure he'll be watching this, so thank you, Ronald. He was very excited about your project. I've been watching your company for maybe about 2 years, and on the stock charts, I've never actually bought, but I saw your presentation today, so I feel like I got a little bit better idea of your project. Let's start out big picture. You have an enormous deposit of gold and copper. Kind of give us your macro view of gold and copper, and then we'll go into your deposit.
Well, we built the company over the past 25 years on the belief that the price of gold would go substantially higher. We got lucky on copper in that we weren't looking for copper, but it came along with some of our gold discoveries. And today we remain extremely bullish on both metals.
Yeah. Okay, now how many ounces of gold do you have sitting in the ground, and how many pounds of copper?
It's a big number.
Yeah.
Most people won't believe it. It's 183 million ounces of gold in all resource categories and just over 59 billion pounds of copper.
That is amazing. That is really amazing. Okay, so let's go into some of the financial basics. Market cap, debt, cash, enterprise value.
Yeah, the market cap today is, I think, about 1.2 billion US.
Okay.
We have debt on the balance sheet, but that debt on the balance sheet converts into royalties automatically at commercial production. So we do show debt, but understand it's not debt that gets repaid. It becomes an obligation of the project. We have 89 million shares outstanding. I think one of the things I'm most proud about is after running this company for 25 years and building this asset base, we've been very gentle on share dilution, which is unique in our business, as you know.
Yeah.
And having only 89 million shares outstanding with the asset base we have is quite remarkable. We have over $60 million Canadian cash on our balance sheet.
Okay.
We have a vibrant balance sheet. We have access to an ATM, which we use from time to time to replenish cash. But we've kind of gone into every year with a very detailed budget on how we're going to spend the money and why that's going to create value to our shareholders. And then if we need more money beyond that, we have to explain to our shareholders how's that money going to be spent and how is it going to create value for me.
Yeah, and one thing you mentioned in your presentation was that if you do issue more shares, you make sure that you grow the ounces and the pounds in the ground.
Not always easy,
Yeah.
but we've delivered on that now for 25 years. Yeah, so from day one of our guiding principles was to offset equity dilution with ounces in the ground.
Okay.
Grow ounces in the ground year in and year out. We have to issue shares for funding. We don't have revenues.
Yeah.
So the only way we can raise money is either issuing shares or selling non-core assets. But when we issue shares in the marketplace, our expectation of ourselves and our shareholders is that we offset that dilution by growing ounces on a per share basis.
Okay, okay. And as far as insider ownership, with the makeup, how much is available to retail? How much is spoken for at insider?
Yeah, so when you look at the insiders, and I'll include the insiders, co-founders of the company with me, Albert Friedberger is our biggest shareholder. We're probably 25% owned by insiders.
Okay.
So it's a pretty healthy insider ownership, especially in connection with the market cap of the company. We also tend to have some chunky long-term institutional shareholders that are there because they're bullish on gold.
Yeah.
Groups like Copernic, Sprott, John Paulson's a big shareholder. We're part of Van Eck because we are part of the GDXJ.
Yeah.
So if you kind of tie that all together, insiders plus say the next 10 largest shareholders, you're through 50% already.
Okay, okay. And what team have you built? How big is your team? Tell us about the team that you built to build this project.
You know, we tend to bring our senior management in from the big companies, people that have been involved successfully in building big mines.
Yeah.
So a lot of our team has come from the likes of Barrick, Newmont, BHP, Placer Dome, and those big companies.
Okay, okay. How many employees do you got?
Oh, it's less this year because we cut down on substantially started expenditures on early site construction. I think we're probably now at about 40.
Okay, okay. And tell us about the property. Maybe you and I can do a longer interview after the symposium, and we can Zoom and you can screen share with some of the presentations that you did. But you brought up Water is a big thing up there that it looks like you've solved. You've even got a fish hatchery. The camp is being built. Describe the properties for us.
Yeah, so it's really a district.
Okay.
What we own is a district. We have 5 unique deposits in our project, which collectively give us 12 billion tons. All the deposits can actually be mined as open pits, but right now we have 3 of the deposits designed as open pits, 2 as block caves. As we went along with the progress over the years, we also received our environmental approvals. So this is a project that's not only big in a safe jurisdiction, but also is approved from a permitting perspective. One of the drawbacks from permits is that at some point in time, permits do expire.
Yeah.
And our permits are set to expire in July of 2026. But fortunately, there's a mechanism in British Columbia known as substantially started that if we can get that designation, our permits are then good for the life of the project.
Oh.
So in 2021, we decided we're going to do this ourselves. We're going to go out and raise the money, which we did. We secured $500 million Canadian in 2 tranches from Sprout royalties and Ontario Teachers Pension Plan. And those dollars have now been used to fund construction activities at the project. We built a camp. We built roads. We're tying into the power grid by building a switching station with BC Hydro. We built bridges, and we built a fish compensation area.
Yeah, okay. And how much is the power going to cost? I remember that was pretty cheap.
It is very cheap. We're fortunate that the power line that was built by the government, they spent over $700 million extending the grid along Highway 37 right next to our project. And we've now secured with BC Hydro 245 megawatts of power, which at current tariffs is about 5 cents US per kilowatt hour.
Okay, yeah, that's dirt cheap.
A lot cheaper than if you have versus having to make it on your own.
Yes, yeah. Okay, politics. The locals there, they're called First People?
First Nations.
First Nations. Tell us about that.
Yeah, so my experience is if you do not have the support of the local communities, including the indigenous populations, you're not going to get your project moving forward or approved.
Yeah.
So we went very early on. We're dealing with 5 different indigenous groups. In 2008, I went up into each of the communities, spent time with them, educated them who we were, what our plans were. And then as time went on, they were part of the environmental assessment process, where we actually funded their consultants to do their reviews.
Okay.
During the environmental assessment process, they pushed back on a few things. We made a number of design changes to accommodate some of their pushback, which added another $300 million to the capital.
Wow.
But where we sit today, because I think of the interaction we've done, how we've treated them, and the respect we've shown, we now have impact benefit agreements fully in place with the Niska Nation and the Tahltan Nation.
Yeah, that is so important. If you don't talk and communicate with them, then it's not going to happen.
Correct.
Yeah, yeah. Good. Okay, upcoming catalysts. What are some tailwinds you see?
Well, metal prices, obviously, although I'd say that no CEO of a gold mining company is satisfied with their share price, with gold pushing $24 an ounce again. That's just the market reality right now. Catalysts for us, though, specifically will be substantially started designation.
Okay.
Based on conversations we've had with the regulators, and I was up in BC recently, met with the Premier. I think we're in a good shape to perhaps get that designation as early as September, which will be obviously a big de-risking for the asset. And then beyond that, it's getting a joint venture done. We recognize very early on that this project is well beyond our capabilities.
Yeah.
We cannot build a $6 billion project. We're not equipped for that. And in fact, there's maybe only 6 or 7 companies in the world that are.
Yeah.
So we're running a process now with those larger companies to bring one of them in, or perhaps even 2 of them together as a syndicate to form a joint venture that would then make the decisions to move forward and construct and operate the mine.
Okay, okay. Yeah, you need to get a Barrick, a Newmont, or a Nico Eagle or something in there collectively.
Or probably more realistically, a large copper company.
Oh,
And you look at the market caps of the big copper companies and their financial flexibility and experience, they're probably better equipped to build a mine this size than a big gold company.
Okay, okay. Like a BHP.
No comment.
All right. Let's see. Let's talk about the royalties and how this is pretty clever. So they basically gave you the funding, $375 million.
U.S., correct?
375 million U.S. This was the teachers union and Sprott. And so you can use this to help build up the mine and or the project and further it along. and it's not repaid until the mine is in construction or the mine is producing, correct?
Correct.
Okay.
Yeah, so at commercial production, those secured notes convert into royalties.
Okay.
One of them converts into a 1% NSR
Okay.
on the entire project, all metals. The other one converts into a 60% royalty on silver alone. Silver represents a very small portion of the project's revenue, so
Yeah.
60% sounds large, but you equate it back to the size of the project, it's not. But the nice thing about these royalties also, once they are created, after commercial production, we have 3 years to buy half of them back at our option.
Okay. Okay. 3 years to buy it back at your option. That way you're not giving away too much.
Correct.
Okay, okay. And what do you see as the biggest unanswered question? What are some headwinds? What could go wrong?
On a big project, a lot can go wrong. Even on small projects, as we see, things go wrong. Look, our biggest challenge now is to get that partner moving forward, dedicated to the project, and moving towards that construction decision. I have talked about a joint venture for a number of years.
Yeah.
I get that. I think one of the reasons why we trade at, in my view, a ridiculously low valuation is because we don't have that partnership yet.
Okay.
When it happens, that's a big unlocking of value. So getting that is probably the most, and it is the most important aspect of our plan for this year.
Okay, okay. Yeah, you're probably going to see a double overnight when that happens.
Yeah, that would be nice.
Yeah, yeah. Well, Rudy, thank you very much. I wish you the best of luck. Thank you for coming on the show.
Thank you. It was fun.
Yes,
Appreciate
yes. And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy. They can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.